yourself. So the recording has started. So now today we are going to be talking about something very interesting. Let's go to Euro USD. Now, like I used to say, it doesn't have to be complicated. It doesn't have to be complicated. People just really make it complicated. Now, I'm going to talk about two things today. Um, we are going to talk about the 15-minute strategy, right? Now, one thing about um trading that used to confuse a lot of people is time frame. Time frame. People just don't know what time frame to start from. Be like, should I start from the daily time frame? Should I start from now? One thing with me is I have I've gone through this whole thing. I've experienced it. I've known the kind of challenge you're going to face. I know even before you actually face them, because I've gone through these years and all that. I know the kind of challenge I face, and it's common, right? It's very common. I'm not the kind of a mentor that will, tell you, the same thing everybody is doing. I don't do that, right? If you join my mentorship program and you join someone else's mentorship program, it's totally different because I am not just going to be using those first terms or all those crazy English and all that. I'm going to tell you exactly what the problem is from experience, the kind of problem you're going to encounter, and how to solve them. Because I made this a mission to solve all this. I was able to locate, okay, what are these problems exactly? I go to the market, I just them, okay, this is the problem. And there was a time that I encountered a time frame problem. What time frame is it? I'm going to focus on, right? That's a very big issue though. So I've been able to answer all these questions thoroughly and find real answers to them. And that's why it's going to be very easy for you guys because I'm going to make it very, very simple. All right. So now there's something called top-down analysis, right? Top-down analysis. Now I'm going to talk about top-down analysis after I've talked about this one because I want to do two things. Tell you about one strategy, the 15-minute strategy, and also some other things which I'm going to review to you guys very soon. But then we are going to use one stone to quit two birds in the sense that we're also going to be treating time frame, why time frame is a very big issue, and how you can handle it properly. How you can handle it properly. Now, before we go to time frame, again, I said time frame is the next thing we're going to talk about after today's class. So before we talk about time frame, we're going to go to the 15 minute. Now, it doesn't have to be complicated. You don't have to, you don't literally need to focus on any kind of time frame. You just need to pick one and then focus on that. And then whichever you pick, you are then going to do top-down analysis on. Let's say I start with the daily, right? I'm focusing on the daily time frame. If I'm focusing on the daily time frame, that is where I'm going to start from all the time. And then I'm going to work my way down from there. If I'm focusing on the weekly, that is where, see, whatever time frame you focus on, determine the amount or how frequent the trade you take. Now, note, the higher the time frame, the more quality your trades, right? The higher the time frame, the more quality the trades. But then the fewer the trade would be. If I'm focusing on the daily time frame, if the daily time frame tells you that the market is going to go from here, it is very, very likely that the market is actually going to go from there. But then I'm going to get less trade. I might, if I'm waiting, I might get few trades in a week, right? So the higher the time frame, the more quality the trades, but the fewer the trades. The lower the time frame, the less quality the trade, but more. You're going to get more trading opportunities, right? But then if you can then understand that, me personally, I start with I like to start from the 15-minute time frame. Now, that doesn't mean I don't go to the daily time frame to check. Sometimes I do. And we're going to put everything together. Once we understand all these things, we're now going to see how everything can work together to form a perfect strategy. Now, just a brief recap of what we talked about yesterday, market structure, just like a refresh, trying to refresh our memory. Now, let's see from here, market structure. From here, we have, now again, once you open your chart, you don't have to you don't have to go too far back. Just focus on what is currently happening here, like this, right? Because if you go too back, you're going to see another picture, another picture. But then I'm focusing on this, what is currently happening. Now, from here, I see from here, I have my higher high, very simple, my higher low, my higher high, my higher low is always going to follow market structure, my higher high, my higher low, my higher high. What do you think we're expecting here, guys? What are we expecting? What are we expecting here? I want you guys to answer that. Can you guys hear me, please?
Yeah, higher low. Is it?
Exactly. A higher low. We're expecting, and that's what's currently happening. The market is currently giving us a higher low. Once it gives us this higher low, then we are going to look for a perfect opportunity to buy higher high. This makes sense. But then let me show you. So let's see this. Before we go to the 15-minute time frame, I need to make you understand something properly. We're going to first now. We talked about market structure yesterday, and we understood that. We know in an option, we're always going to be expecting higher highs, higher low, higher high, higher low, higher high, like that. But then we said something yesterday that we're going to talk about advanced market structure because it's not as easy and simple as that. Advanced market structure. That's where we are going to resume from before we then divert into what we have for us today. All right, advanced market structure. Now, according to market structure that I showed you yesterday, we're going to be expecting to see higher high, higher low, higher high. Now, I said something yesterday, if you remember, at the end of the class, that sometimes the market gives you something like this. And a lot of people might think this is the higher low. We even took look at some examples. This is the higher low. And then it's very logical that might want to buy. And then they're buying, the market gives them this push like this. They're buying here, putting their stop loss here. But look at what happened. The market gives them a push down like this, right? The market continue going down like this. Hold on, 1 minute. The market continue going down like this, and then they feel like, okay, maybe it said the market will start going up from, which is very logical. The market goes up, give them a push down like this. Remember, the market is still within its rights. Right now, the market does this. When the market is now like when you are now too scared to enter the trade, or you are blowing your account. Now, remember the our point of interest, the highest point and the lowest point. Guys, you need to be able to locate this. You need to be able to map out this. And I'm going to show you guys on the chart. So once you have something like this, as long as the market has not broken through here, it's still within its right. It's still within its right. Now, when you have not entered here, and then you are too scared to enter, then the market will do something like this. We then do something like this. It is not that you are wrong. You just don't know where exactly to buy from. How can you then tell it is here you
Mm-hmm.
need to buy from? That is the thing. Now, sometimes, let me show you guys something. Sometimes the market does something like this. The market does something like this. See, well, again, don't get yourself too worked up about this. I'm still going to show you guys how all this thing plays out on the real charts. Sometimes the market does something like this. It gives you a high, a low, a higher high, like this, and then it gives you this. And you're feeling like, this one is not a pullback. It's not a valid pullback. You still feel the market is going to go down. But then look at what the market does. It continues going up. And they feel like, whoa, why? And then you're thinking, okay, this is my higher high, higher low, higher high, higher low, higher high. And then the market does something like this. And then you think, oh, higher low, you're expecting a higher high, you're buying. But then the market then do something like this. And then you're feeling, a change of character has happened. The market has broken through this low. A change of character has happened. You're looking for opportunities to sell. And then the market gives you something like this. And then you're looking for opportunities to sell. And then the market do something like this and then continue going up. Then what happened? You just have made a mistake because this is not how it looks like. Higher high, higher low, higher high, higher low. This is not the higher low here.
Mm-hmm.
Instead, it is like this. Higher high, higher low, one move, higher high, higher low, higher high. You see how this makes sense now? This is higher high, higher low, higher high, higher low, higher high. Now the point is, how can you know? Because I'm not just going to give you all these things. I'm going to tell you how can you know how to locate that this is not a valid pullback. How can I tell if this is because it can really look like a valid pullback? It can really look like a valid pullback. How can you tell for sure that this here is not a valid pullback, that this is
Mm.
a valid pullback? Because if you cannot tell what valid pullback is, if you cannot tell the difference between this and this, it is going to, if you cannot tell the difference between this and this, it's going to fuck you up. Trust me, it's going to fuck you up big time.
Mm.
Now, the question is, how can I tell the difference? And it's a very simple thing you can use to tell. I'm going to show you. Very, very simple. Now, watch this. I have this. Higher high, a high, hello, a higher high like this. I have this. I am waiting to see I want to see if this is going to be a valid pullback. I want to know what valid pullback or not. Right? What do I do? Guys, note. First, you need to know the direction of the market. Of course, it's an uptrend. You need to locate the swing. This is my swing high, swing low, swing high. Like higher low, higher high.
Mm-hmm.
So I want to drag my point of interest, like I said yesterday. My recent lowest point, like this, and my recent highest point, like this. I want to do this, right? I want to be able to note this because this is in this space is where I'm interested in, right? So the next thing I want to do is I want to bring
Mm-hmm.
out my Fibonacci retracement tool. Now, hold on. Let me show you. This is called Fibonacci. I'm going to show you. The tool looks like this. If you open it on your own end, it's going to look something like this. I want to show you guys the setting. It's going to look something like this, right? It's going to look something like this. Now, to get it again, I think in our next class, I'm going to be showing you how to, I'm going to be teaching you guys this interface. Now, this tool here, how do you get it? You come here, look at it. This is it here. Just come here, you see Fibonacci retracement, right? You take this tool, you drag it. Now, once I bring out this tool like this, right? I'm going to edit it. I can just click on it like this. If you click on it, you're going to see its settings like this. I'm going to go to the settings and I just want to edit it. I want to unmark all this one. I just need I need a 0, 1, and 0.5. So everything else here is not useful. So I'm going to untick them like this. I just need this 0, 1, and 0.5 like this. All right. So once I get this like this, what do? I go down to the Fibonacci retracement tool. Guys, my point of interest, recent lowest point to recent highest point. I'm going to drag it from the recent lowest point like this, right to the recent highest point here like this. I'm going to drag it like this.
Mm-hmm.
So once I drag it like this, what is this? Guys, what is this showing me? You see that there's two parts to this green part and this gray part. The green and the gray. So
Is it
for this,
is it
go ahead, go ahead.
discount and premium, Abby?
Exactly. I
Discount and
just don't
premium.
discount and premium. Yeah. This is a discount, this is a premium, right? So
We
for
we like
this,
to buy in the discount, right?
exactly, for this to be a valid pullback, it needs to get to what? The discount. If it doesn't get to the discount, it is, see, if it comes here, gets here, and it gives you a continuation to the upside like this, it means this is just an inducement. So what do I do in this scenario? I adjust this like this. It is still one move. It is still one move like this. So now I'm going to be expecting this to come like this. Now you see what I just drew. In the process of this, hold on. In the process of this coming like this, it has now look this one. If you're considering this higher high, higher low, higher high, this will now look like a change of character, but it is not. It is what the market coming to the what the discount price. The market has to come to the discount price from this top here.
Mm.
You understand? It has to come to the discount price. It comes to the discount price. Now, this is where we look for opportunity to buy. So this is not higher high, higher low, higher high, higher low, higher high, change of character. No, it is
So
higher
where?
high, higher low, one move, higher high. Then this is what the higher low. You understand? So let's see. Let's continue. Let me take all this one back. Now, we are expecting this to get to what? The discount price. It gets to the discount price. This is where we look for opportunity here to buy. Now, let me show you guys examples of this on the chart. Let me show you guys examples of this on the chart. Let me get all these things off. Let me show you examples of this on the chart. Guys, I hope we're getting this. I hope we're getting this.
Which
So let's,
zone is the discount price, please? Where? Which place?
you say what?
Hello?
Yeah, go ahead, go ahead.
Hello? Can you
I
hear
can
me?
I can hear you. I can hear you.
Hello? Can you hear me?
Yes, yes, yes. I'm hearing you. Can you hear me? I'm hearing you. Can you hear me?
Ola, can you hear me?
Yes, yes, I can hear you.
Like the network is season. Hello.
I can I
Ola, can you
can
hear me?
I can
Can you
hear
hear
you
me?
guys. Yeah.
Yeah. Can you briefly? Okay. Okay, please, can you briefly
Explain
do
that
a
again.
recap of
Re-
yeah, a recap of what you just said again? Um, which which area you talked about the discount? Yeah, I can hear you.
Can you guys hear me now? Can
You
you hear
talked
me now?
about. Can you just do a brief recap of what the summation you just made now?
I will do that. But can you hear me, please? Can you hear me? Hold on.
A brief recap of what you just said, what you just showed us now.
Okay, can you hear me though? Can you hear me, please? Let me change my network.
Hello. Before you know, boom,
Out.
it goes
That's what's
another
killing
way.
it. Now we're trying to kill that guy.
Mm-mm.
Sorry, my network
Mm.
went off. I just had to reconnect to another
Okay.
network.
Okay.
Okay. Can you hear us? We're
Yeah,
hearing you.
yeah, I can hear you guys. Can you hear me too now?
Okay.
Yeah.
Yeah, better.
Okay. My network, I had to quickly switch the network there.
Oh, thanks.
All
So
right.
my request is a brief recap of what you just submitted.
All right. Let me do Let me do a recap. Now, again, what?
You're talking about specifically the discount zone. Can you point it? Let me know. Let
All
me
right.
Or
see.
just put, or can you just mark it? Discount and premium.
Yeah, just mark it so that
All right. All
one
right.
can identify it.
Now, watch. Again, in an
Okay.
uptrend, higher high, higher low, higher high
Mm-hmm.
like this. Now, remember, the next thing we want to do in this scenario is to mark out
Mm-hmm.
what our point of interest, where I'm interested in, this low right here. Guys, this is very important to do. Don't ignore this. It is very important. It gives you clarity. It is very important. I do that myself till now. And then this, I mark this out. And we're going to see this on the charts. I'm going to show you guys this on the charts. So once I mark this out like this, I then go bring out my Fibonacci retracement. Two, in an uptrend, you start from the bottom like this, and you drag to the top. And now we have two parts. We have the discount. This bottom here, this one here is the discount. And then this one here is the premium, right? So in an uptrend, you are waiting for the markets to come back down to the discount.
Mm-hmm.
If it's still in the premium, it is not the valid pullback. You are waiting for a see, this is higher high, higher low, higher high. You're expecting a higher low. If this did not get to the discount, it is not a higher low, right? It is not a higher low. You're waiting for a higher low. It is just what we call an inducement. So we're going to still talk about that. It is just an inducement. And then if it continues going up like this, right? It gets to it's still in the premium, and then it did not get to this discount. That instances where the market will still continue though to the upside. If you do continue to the upside and it has not gotten to the discount, what do? We adjust this like this. We adjust. So this is still now our premium and our discount, right? So it means that we are still expecting this to come from this top to the discount. If it does not come, and then for one reason or the other, the market gold does this a lot, continue going up like this, what do? We keep on adjusting, because at some point,
It will enter the
exactly,
discount.
it is still going to come back to the discount.
Okay.
So this
And then when it
Fibonacci retracement to
okay.
help us to note that and not to fall victim of all these things. So go ahead, the question.
I was gonna say, so once it gets into the discount and then it retraces, it reverses back and it goes back up. That's where you take your entry.
Now, note, hold on. If it gets to the discount,
Yeah.
we now look for once it gets to the discount, we now mark out what our what point of interest, like the order block and the fair value gap.
Okay.
You understand? We now look
Yes.
for our order block, fair value gap in this discount point, in this
Yes.
discount price.
Yes.
So when the
Yes.
market gets to our order block, for instance, this is where we now look for our entry. Guys, if the market gets to our order block, that doesn't mean we just jump into the trade again. No. We look for entry confirmation, which is where we're still going to get to. We're taking this one step at a time. There's something called entry confirmation. The market gets your order block, doesn't automatically give you the right or the go ahead to jump into the market. No, you still wait for entry confirmation, which is something I'm going to show you as we progress. Right, we're not just there yet. So once we get our entry confirmation, then we look forward. This is where we can now take our entry like this. our entry like this, and then we target what we know a break of structure is going to happen, right? For this market to get, so we target this break. We don't target anything above. No, we target the break of structure. This is how it's going to look like, and then we can now have something like this. Then once we have something like this, now look at how we now looks like according to market structure. This now is what our higher high, our higher low, our higher high, higher low, higher high. You see how this?
Now, one more, yeah. Now, one more thing, Mr. Ola.
Yeah, go
Is
ahead.
it now on the chart in reality
Yes.
on any of the pairs? Can one rightly predict? Okay, it's going to come to the discount, so it's going to play a little trick before he head back to premium zone.
Yeah,
How
that's
can
what
one
I'm about
identify?
to show you.
How can one,
I'm going to show you guys now. I'm going to show you guys on the
okay?
chart now.
It will show us on the chart. It will show
Yes,
us on the chart.
yes.
Yeah,
Just now. This one is just for you to have an idea of what
an
we're.
idea of what
Yeah,
the
and then we're
strategy.
then
Okay.
going to go to the chart. Then you're going to see
I
exactly
think
how
this
that
is what I
plays
need.
out. All right. So now let's see. Let's see. Let's start from here. I'm going to do. I'm going to do back testing. You see the importance of back testing. So we're going to see it like it happened real time, right? So it's not going to be it's not going to be something. So let's come back to this level here. All right. So this was an uptrend, right?
Mm-hmm.
This was an uptrend. Let's say these are higher high. So from here, these are our recent lowest point. These are low here. And then of course, these are our high, just
Mm-hmm.
as we were doing before. So what's the next
Mm-hmm.
thing I do? I take out my Fibonacci retracement tool.
Uh-huh. Uh-huh.
I drag it like this, right to the
Uh-huh.
stop.
Uh-huh.
So I'm expecting the market to come to the what? To the discount price.
Discount.
Right. So let's see what then happened. Let me play this and see. Let's see what happened. And the market started moving. Started moving. Let's see. We're going to see this. And then look at this. The market then gets what? See, you just need
Mm.
this to get to the what to the discount price. Now, when we start, we're still going to get to the topic of order block and fair value gap. We're going to understand how to locate them because that's
Mm.
important. But
Mm.
looking at this is what a this is an this is a gap. This is an order block here. I don't know if you
Uh,
understand, if you know how to locate them, but we're still going to get there. I
I
don't.
know other block, but fair
Yeah,
value gap, maybe. Is that a fair value? Okay.
this is an order block here.
Okay.
But you're going to see, we're going to come back to this. You're going to understand how to locate them. So don't get yourself worked up. We just want to understand this first. Right? So the market, this is an order block. The market came here, tap into this order block, and then look at what then happened. So this is
Sorry, can I
where
ask you a question? No
go
vex.
ahead,
I want to ask you one question, eh?
go ahead.
You see this order block, eh? Isn't it okay? Is it a is a bullish order block, right?
Yes, it's a bullish order block.
Okay, isn't it the last candle, the last bearish candle meant to be at the end of that?
This last bearish candle before this push up. Now, guys, see, I
Okay.
understand you want to understand what order block is right now, but then just let's also understand this. Again, it's
Okay.
one step at a time. You don't have to get yourself worked up. You're going to
No,
understand.
no,
Yeah,
no problem.
yeah. So then let's see. Then the markets. So here we would have looked for our entry here, somewhere like
Mm,
this.
mm.
Again, I said normally if you just want to use an order block to enter, this is how your stop loss would be, and then your take profit would be. But this is not a good risk to reward. That is why we still need to look for any
How,
opportunity.
this is not a good risk. How many is this one to how many one to what? Is this 1 to 2 or
At least you need to have at least 1 to 5, 1 to 7 risk to reward.
okay?
But then that's where our entry comes. The market getting to your order block does not automatically give you the go ahead. No, you still look for entry. And then if you look for entry, we can then see have something, a very good risk to reward, something like this. This is how I like my risk to reward to be. Now, let's then see what happened. Let's then see what happened. We're still going to talk about all this. Just watch.
Mm, mm.
Let us see what happened. So whatever then is happening here, I don't care because I know the market is going to see. The market then gets to what? Take profit, right? Giving us what? A break of structure. This is our break of structure. So once the market gives us a break of structure like this, what do? We adjust. We adjust all these things. Take all these things away. I adjust. And how do I adjust? Now look at this. This becomes my low. Let me do this. From here, we
Okay,
have
you remove the point of
yeah,
interest to the new
yeah,
point of interest.
exactly. We have this low, the higher high. the higher low, like
That's
this,
the new higher low.
and then a higher high. So our point of interest will adjust. This one will now be the new low
Hey
here,
God.
as you can see. And then let's wait for the new high. Let's see what the new now for us to get the new high. Now look at this one now. Let's see. I want to show you guys something. Hold on, no, let me even do this. Let me do this. Let me do this to give you guys clarity. Now, for you to see if for you to locate the new high, this is a very simple way to know. Anytime you start seeing like, okay, the market has given you a break of structure, right? And then you start seeing the market started going up. Immediately the market, now let me show you guys quickly something before I continue. So according from what you learned yesterday, we're saying these are high, our low, higher high, higher low, and then we're expecting what a higher high, right? Now, these are we're expecting the market to give us a break or structure like this, right? The market to break the recent or the previous recent highest point to give us a new highest point. Now, guys, immediately the market breaks this one now, breaks this current highest point to give us the new highest point. We will start anticipating a pullback. Now, note, I am not saying a pullback start happening when the market breaks. No, I'm saying start anticipating a pullback. Right? Do you understand the difference? I'm not saying
because it broke the
yeah, immediately a break of structure happens. The market has broken this like this. I'm going to start to anticipate this
pullback.
happening, a
Okay,
pullback
yes,
happening. Now,
yes.
that does not necessarily mean that immediately a pullback, a break of structure happen, a pullback will start happening. No, I'm not saying it will start happening. I'm saying I'm anticipating it. I'm expecting it.
Yeah.
Right? I'm getting prepared for it. Because sometimes you think it's going to happen soon, then it doesn't happen soon. Sometimes it's going to go very up. Sometimes it can decide to start giving you a pullback from any point. Just that I will start anticipating it. I'm expecting it. I'm getting prepared for it. And that's exactly what we're going to do here. Now, let me show you. Let me show you. Now, we've had what? A break of structure here. Let's see. Now, talking about break of structure, I need to say this. Talking about break of structure, let me zoom in on this. For this to be a break of structure, we need to, I said this yesterday, but I need to say this again. We need to see a candle break. Now, what do I mean by candle break? Now, if you put this at the see, if I put this at this top here, let's say this is my break of structure here. This is where my break of structure is here like this at this point.
No.
This one will not be a valid break of structure because it is a weak break. We need this candle here to close above. But look at this one now. Let's put it at the right place here. There's actually a candle break. The candles here closed above that line. So this is actually a real break of structure here, right?
Okay.
Until you see if there is no candle break, if just this weak break, it is not a break of structure. You understand?
Okay.
Yeah. So now let me continue now. Now, so like I said, once you see a break of structure, we've seen a break of structure, I begin to anticipate a pullback. Doesn't mean a pullback can happen. I'm expecting it. Now let's see. So again, once you start anticipating a pullback and you start seeing multiple, let's say you see now it's an uptrend, we're expecting to see more of green. So once you see a pullback and you start seeing like three opposite candles, three red candles following each other. Let me show you an example. Look at this now. Look at this. We have a red candle, a red candle, a red candle. Three. I begin to assume this is my high, right? So if I'm assuming this is my high, then this is it here, right? I'm going to put, this becomes my point of interest, like this, right? And then what do I do after I get my point of interest? Guys, you don't have to stress this. I drag my
Fibonacci.
like this, all right? Now, remember, we are trading this we're assuming, guys, do you know that if we are not backtesting here, you will not be able to see all these things. We're assuming all these things has not happened. The rest has not happened. Because we are back testing, so we have not seen what has happened. If you are not back testing, you would have seen everything that has happened. So you just be seeing all this thing according to the whole thing. But this one, we are not seeing what has happened. So we are
We're
just
not seeing the future yet.
we are
It's
not
just the
seeing
present.
exactly. So I'm trading this as I would trade this normally, as I would see this. This is what I would normally do, right? Because this is what is happening at this point. At this point in time, this is what would be happening. This is what I would be seeing. Right? So let's see what then happened. This is how I would do this. So let's see what then happened. You see, the market did not get to the midpoint. You see?
Rather, it went above the premium.
It's just, you understand. So this is not our higher high. That's what this is telling me. This is not my higher
Okay.
high. So what do? I take this one
You
off. It's not
expand.
relevant yet.
You expand the
Yeah.
this thing,
I
Abby.
now wait. I'll wait for what? Let's see. Let's see. And I look at this. I'm beginning to see what?
The
More
pullback.
a pullback,
Pullback.
more
Mhm.
red candles begin to appear.
Mm.
Look at this. The market was going up. We are seeing more of red. So
Please,
for you to
yes,
now start seeing greens come, it means red come. It means that
come.
maybe the market wants to start giving us a pullback. So this I
Mm.
can literally assume that this is what my high now.
Okay.
You understand? So then what am I going to do? My Fibonacci retracement 2 again, like this. And I'm going to be expecting this to guess what? To the midpoint.
To
To the
the
discount.
discounts.
Exactly. So let's see. Let's see. And then look at this. This then up. No, look at let's see. If this one continue going up, look at that. Look at that. Now, guys, I want to quickly point something out to you. Let me go back here. I want to point something out to you. Now, if you do not understand the discount and the premium, guys, a lot of people would have fell for this. A lot of people would have think, oh, this is my higher high, higher low, and then they would have tried to enter the market like this.
Mm-hmm.
They would have tried to enter the market like this.
Mm.
But we are not going to fall for this. Why? Because we understand this thing has to still get to the premium, to the discount price.
Mm.
We will not be falling for this. This is
Mm.
very easy to fall for, right,
Mm.
guys? Because you cannot see the future yet. This is what you'll be seeing, and then a lot of people will be so scared of missing out. They know this is an uptrend. They know the market wants to go up, and then it is easy for them to think this is this higher high, higher low, higher high, higher low. It's very easy for you to think this. It is very easy, but we won't be falling for this. Why? Because we understand that the market still needs to get to what? The discount price, no matter how long this is. Guys, note, this is a daily time frame. All these things will not happen anytime soon. All these things are, each candle represent one day, one day, one day, one day, one day, one day. So this year is a long wait. It is going to be very easy for you to think the market is going to break this. So let's see what then happened. See, look at this.
Hmm.
Do you see this? The
Mhm.
market quickly takes them out. But then, because we understand what we are doing, the market will not get to our own position. And guys, when we start understanding order block and fair value gap, you would understand that this here is an order block here. And then the market has gotten to what? Our order block. And then we look for our entry. And then this is where we will now be entering. We cannot have a position like this. Now having what? A good risk to reward. Something like this. Right? And then let's see what happened. Let's see what happened. We know the market is not going to come back. We know a break of truth. That's why you can place a trade with confidence. Look at that.
Ah, chairman, God in heaven.
Look at that. Look at
One
that.
talking.
Now, once this happened, what do? We adjust. Again, we
As
adjust.
it is right now, the market could be said to be ranging, isn't it?
So yeah.
Yes.
Now, listen. Let's not go too far. Leave ranging or not ranging. Let's just understand the
Okay.
outer,
Okay.
let's understand what the bigger picture first. We're still going to talk about when the market is ranging, when we get to liquidity and all the stuff. We're going to understand all
Okay.
these things. But let's just understand what is really, really happening from the outer
Happening.
space.
Okay.
Yeah. Do you understand? So
Hmm.
look at this now. If I want to draw my path from here now, watch. We started from here. We said we have this higher high, this higher low, this higher high. Now this becomes our higher low, and then this. You see how this is coming into shape now. Now, what do? We adjust our point of interest. We take all
Yes.
this thing off, like this. This becomes our new low.
Can I ask you a question?
Go ahead.
What if it happens if the market is, are you going to show the version when the market is in a bearish
Yeah.
movement?
I will show you that.
Oh, okay.
So look at this. We have the low like this, and then we have had a break of structure. So we now start having what? Multiple red opposite candle. We are just going to assume that is our high, right? Until we have what? Something else, right? And then we're going to do what? We are going to drag this like this, right? If this did not get to the discount and it continue going up, what do? We just adjust. It's not a big deal, right?
Yeah.
We are going to just adjust. So we are not trying to force the market. We are just following what it's saying. Very simple. We are not forcing it. So what do? We come to this other discount price and we look for the other block. This here is our other block right here. I'm going to still tell you what other block means, how to locate them and all that. And then what do? We expect the market to come down. If it doesn't come down, it goes up, we're going to adjust. Then look at, let's see. Now look at this. Again, a week. Remember what I talk about week. If you see a week here, it is not a valid one, right? So you need a candle close, right? So that there is not valid. All right, so let's see. And then you see the market started coming down. Now, sometimes the market will do all these things. Even if you get to the premium, you start going up. That is where entry signals is important. That is where other block and all that. Because sometimes it gets to the premium and it gives you something like this. It's still not going to go up from there. You still want to come down. That's why you need to be able to locate your other block and fair value gap. Right? All these things work hand in hand. And then we're still going to get to that.
Okay, so it has to touch your order block, has to enter your order block.
Now, the market can be very complicated, and that is why you need to understand all these things first. Sometimes you're expecting it to get to the other block, it doesn't.
Okay.
Right? Sometimes you respect the fair value gap instead. And I'm going to tell you the difference here. Now, that is why the market getting to our order block or our fair value gap is not the only requirement. There's something called entry signal, right? Which I'm still going to tell you. We are going to go to the lower time frame to confirm, okay, does the market wants to reverse here, right? And all that. So we're going to get to that. I just want you guys to understand this first properly. All right, so let's see. Now look at this. Look at this. This is my order block here, but the market did not actually get to my order block. But if I'm to use my fair value gap, this is my fair value gap. The market actually gets my fair value gap here. You see? Again, you're still going to understand the difference between these two. And we're still going to come back to these examples and then you are going to see it more clearly, right? So don't just get yourself worked up. So let's see. Then we would have had our entry. Now look at this. The market is still, okay, let's see. We would have had our entry somehow like this. Somehow like this. And the target's what? That's top here, the break of structure there. So let's see what happened. So whatever the market is trying to do, we understand that, okay, we have already done our own part. Whatever it's trying to do, we are not panicking. We've done our part. Now look at that. Look at that. So do your part. So all these things, guys, note how we have been able to filter out all this bullshit. All this bullshit. All this one here. How we have been able to filter out all these things here. All this internal structural shit. Because if you're not able to do all these things here is there to confuse you. Because normally you will not know or you won't be able to tell this basic thing. That all this noise you are seeing here is just noise. And this is just how this whole thing is. This is the main point. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. See how we are able to filter through all this rubbish. And this is just...
Can I ask you a question? Sorry, yeah? You see this internal liquidity, right? All this internal liquidity that would more or less internal liquidity. Okay.
Yeah. Again, I'm still going to talk about liquidity. Liquidity is a very important topic. But then I just don't want to jam pack too many information for us at the same time. Right? That's why I'm not even talking about order block and fair value.
Chairman, what I want to find out, see the strategy you're giving us now. This is this strategy. Yeah, I think yeah, okay. Yeah, I was gonna say something. See, like this strategy now. See how this we've more or less got like 90% of this strategy. You understand? It's like we're gonna stick to this strategy, right? We don't need to learn any other strategy.
No, you don't need anything.
That's what I just wanted to make clear.
You don't need anything else. Trust me. You don't.
And this is SMC. This is SMC,
yes.
SMC. Okay, smart money.
Yeah. Now watch this. Once we have something like this, what do? Again, we adjust.
Adjust.
This is the low. And we're assuming this is our high.
So
Like
why didn't you
this.
take this last high here? This last low. This okay. This okay.
This one.
No. Go. Keep
This
going.
one.
No, down. Let's go down. Straight
This one.
down. No. Um. Oh, gosh. No, go
Where?
forward. Go forward. Go forward. Go back. Go forward. Forward.
Forward.
Yeah. Keep going to the low that you've marked already. Yeah.
This one.
The one next to it. Next to it. Keep going. Why? Okay.
Why didn't I take this one?
Yeah.
That's a very nice question. Why didn't I consider this one? Why was it this I considered? Now let me show you. Let me go back. Now
Okay. Okay. I think I've seen it now.
look at from here. This was the previous low here, that our point
Yeah.
of interest. And then the
Mm-hmm.
market went up like this. And
Mm-hmm.
now remember, we are looking at this is where the market gets to. This is what our Fibonacci retracement, right?
Mm.
And the market came from this top here to the midpoint to the lowest point. This is the lowest point where the market came from here. That is our low, not this one. It's the low that this is the low that came from this high, right? This is the low we are going to consider, not this one. This one is irrelevant here.
Okay.
Right? This one looks good, right? It looks good, but it's not the one that looks good. It's the one that actually is. This is the low that came from
It's
this.
the one. It's not the one that the high produced.
Yeah, it's the one. This is the low that this high produced. That is the low we're going to consider. Do you understand?
Okay.
Not this.
Okay, this one.
Not this
Okay.
This one.
Okay.
Do you understand? Right? So what do? We adjust. We go to that low here now, like this.
Okay, this is the low that this high produced. This
Not
high
this high
produced this low.
So we now mark the low, and
Okay.
then this is the new point of interest. Like this. Now, this is how it is. Now, that thing gives us clarity because a lot of people will really think this is the low. This one makes sense. It looks good. But it's not about looking good. It's about the real thing. This is how it is.
So when you see this low that you marked now, yeah?
Yeah.
Can you just do the rewind so I can see how how it came about this low?
All right.
That rewind. I just want to be clear. Maybe
you can remove the fair value gap that you mark so that everything will be okay.
No,
yes, we can
replay.
replay.
Let me do this.
Okay.
Hold on. Let's go back here. Now watch this. Let me redo this from here. So the market has given us this. Watch. It has given us this high, this low, right? So we now, and it's giving us this. So we are going to mark what? Our point of interest. The low here.
Okay.
Right? We have gotten the low here already. The low is in an uptrend. The low is the first thing you're going to get. Right? And I said to get the high, once you start seeing opposite kind, once you get a break of structure, right? We first need to get a break of structure, right? We get a break of structure and we start seeing, and I said something about once you get a break of structure, you start anticipating or expecting what? A pullback, right? I said something like that, right? This is our break of structure. So once you get a break of structure, we start anticipating
the next high.
Yeah, we start anticipating the next time. So most of the time, some of the time, the market continue going up, right? But then immediately we get a break of structure and we see, of course, it's in an uptrend. We're expecting to see more of green candles. But once we get a break of structure, we start seeing multiple red candles. Then we just consider that our high, our higher high. And then if we consider this our higher high and then the market continue going up, we're going to just adjust, right? So, of course, we are not God. We are not seeing the future. All right. We just need to prepare. All right. So we assume this is our higher high until the market continue going up, because the market could literally continue from this green, continue going up like this. If the market continue going up like this, we're just going to what? Adjust.
Wait, adjust. Yeah. I'm going to adjust. Yeah.
Right. We're just going to adjust. Right. But then let's see what then happens. After we do this, what do? We drag out our Fibonacci. For this to be a valid pullback, this has to get to the discount. It has to move to the discount, right? It has to move to the discount. Now, if this moves to the discount like this, right? It's moved to the discount. And then it gives us a break of structure like this. right? It gives us a break of structure like this. What do? We just adjust. We are going to now have the new low like this. This is now going to be the new low. Why? Because it is the low that this high produced. Watch, this is the low from previous one because it was the low that this high produced, right? We are concerned
Mm-hmm.
about the high, the low, the high, the low, right? The highest point, the lowest
Mm-hmm.
point.
Mm-hmm.
See, in this move here, this is the highest point here, and then this is the lowest point.
Mm-hmm.
The highest point, we're expecting to see the lowest point, and that's what we're expecting to see. And then for this to be a valid low, it needs to get to the what? Discount price.
Discount.
You understand? So let's see. Let's see what then happens. Now, it's not going to be diagram perfect. That's the thing. It's not always going to be diagram perfect. It's going to look messy sometimes. But if you really understand this whole thing, you understand the concept. Look at this. It's beginning to go down like this. See, watch this. A lot of people would still fall for this. A lot of people will think, maybe this is it. And that is where other block and fair value gap comes in. Because the market getting to the discount price does not necessarily mean is a signal to buy. No.
Mm-hmm.
The market is still within its right. As the market could literally come anywhere. All this place here is this thing's jurisdiction, as long as it's still an uptrend. As long as it did not break here, it is still an uptrend. So it can do whatever it wants to do in this. It is still its jurisdiction, right? So look at this. You cannot just say because the market has got to the discount price and is giving you a push to the upside, you want to just start buying. No, it will take you out. You need to wait for the market to give you some kind of a signal. That is where we're going to talk about other block and fair value gap. Now, look at the market did all this, came here, and then the market started giving us a push to the upside from there. So whatever how messy the thing looks like, it doesn't matter. What we're focused on is the lowest point in this move. Where is the lowest point here? This here is the lowest point. That is where we're considering the lowest point, right? So the lowest point that produced what? A break of structure. See, this high produced this low, and this low produced the next high. That's what we're focused on. We're focused on the high that produced the low, and then the low. Now look at that. And you're focused on the high that produced the low, and then the low that produced this new high.
High, yeah.
Understand? Now look at this. There are multiple lows in this scenario, in this thing.
Yes.
Let me show you. There are multiple low here. Let me show you. This is a low here. This is a low. This is a low here, right? But then we're not focusing on any kind of low. We're
Okay,
focusing on
producing.
the lowest, the lowest
The lowest, yeah,
that produced that high. This is the lowest here. It might not look so nice or diagram perfect. This might look very good, very nice, but this is actually the low. It doesn't have to be pretty.
I just wanted to be sure because
Yeah, that is what the
got it now.
mentorship. That is what the mentorship is about. This is not me talking on TikTok.
Before this class,
Yeah,
sorry, before this moment, this session with you,
yeah,
I think where persons like me, based on what we've been fed, got it wrong, is the marking of your high and your low is different. You know?
okay.
Yeah, that's what I just spotted now. Because you focuses on the highest and the lowest.
Yeah,
The lowest and the highest.
exactly.
But they were focusing on pattern, the diagram, the structure itself.
No.
So everything small, big, they're just marking it.
Exactly.
So
And you are going to
that's
get.
the issue.
See, if you are doing that, you are going to be focusing on all these things. Now,
Yeah,
this thing,
yeah.
there are still instances where we're going to focus on this
See,
thing.
there's something I want you to bring up. Can
Yeah,
you go to this Z line diagram, this line, this switch the candle to this trend line.
Okay. Now,
Yeah, I want to show you something.
Okay, hold on. You see, it's the
so
same.
all this small M, everything, they were always marking it and saying it's a high, it's a low.
Guys, according to what I showed you, this is our low here, according to me, my own this thing.
Which is no, your own is cool. I'm
this
cool
is our
with it.
low.
It's okay.
This is our high. This is our low here. See, it's still the same thing, even if you use the line diagram. You are just filtering out all this noises, all these things here. And that is
really nice.
Can I ask you a question, Chairman? Let me ask you one question.
Go ahead.
You see these double bottom, double tops, all these things.
Okay, all
Why
this
are they?
pattern.
What's getting them? Those guys that do that, they always because before we had a mentor, he was always using that, and all the traders were always like out of 10, 9 losses, out of 10 losses, out of
Now,
10 trades.
see.
And in addition to what you just said, please, Mr. Let me add
Yeah, go
this.
ahead. Go ahead.
He will get the structure, but the market will take him out before he had the actual direction, which he even got right.
Yeah,
It will if
The
the is
setup
going
be
to come up,
correct, though, but it will just take
incorrect.
him
Yeah,
out.
but will take him out always.
Then the
now,
later will come back to his TP.
yeah, because now I'll tell you why that happens. Because see, cramming is different from understanding. They just want to cram or know the pattern. They're looking for this. They're looking for a kind of a double formation like this. They're looking for patterns.
Uh-huh.
They're looking for something
Exactly.
like that. But
Exactly.
now let me now show you. Let me now show you how you can understand this properly. See, this thing here is not wrong. But then they are just looking for the diagram. They're looking for something that looks like a W or a hand
Yes.
and all that.
Yes.
But that is
Yes.
not how to
Yes.
understand it. Let me show you how to understand this. Let me just show you this, what it means. Let me show you. See, what I just did here is a change of character. Let me now show you. Let's do this. See, in a downtrend, we have beginning to have lower low, lower high, lower low like this, lower high. Lower low. Now, what they are looking for is, and then once I have something like this, we are going to do the same thing. We are going to follow our own structure. The highest point, our point of interest, and then the lowest point here, right? And then for this to be, see, it's a downtrend. For this to continue being a downtrend, we want to see a pullback like this, and then a continuation, a break of structure. We already understand that. That's what we want to see. But instance, there are some cases where this does not happen. There are some cases where the market changes from a downtrend to an uptrend. And this is what happened. If the market breaks this high that we expect to be protected, the market breaks this high like this, that we thought is protected.
Change of character, right? Or
Change of character has happened. This is our change of
break of
character at
structure,
this point. A change of character here has happened. CHOCH. A change of character has happened. Now, guys, this is what your mentors and all that. This is what they are looking for. This is the W they are looking for. You see? You see, that is the W formation they are looking for. But because they do not really understand why, because this thing might not, it's not always, guys, this is what happens. It's not always going to be diagram perfect like this. Because if you go cram diagram, it's not always going to be diagram perfect. But you just need, if you understand what you're looking for, if you understand what really is happening, not just diagram. Now, look at this. It has not changed from a downtrend to an uptrend. In an uptrend, we know, because we understand market structure, that in an uptrend, we're going to be expecting what? Higher high. This is now our higher high. We're going to be expecting what? A higher low like this. A higher low like this, right? And then a continuation. And then hence, whatever W they are looking for is in all these things. Now, by the time they see this W, the market is already gone. By the time they see something like this, the market is gone already.
Yeah, the market has taken them out.
You understand? But we understand. We understand a change of character once we see it. We understand that this high is protected. Immediately we see a break here. We know it's an uptrend. The market is giving us what? Higher high, wants to come give us a higher low. And then see, there are some clowns that trade trend line. Trend line is even way worse. I call them clowns. It's very funny when I see people trade trend lines. I go to people's live section. Sometimes I want to learn more. I go to people's live section that do all these things, and I see people trade trend lines. And it's crazy because let me show you something. They see something like this. The market is giving them something like this. Higher high, higher low, higher high. The market is giving them something like this. This thing is too big. Let me show you guys something. Now, they want to trade trend line. They want to see something like this. In an uptrend, they see, okay, the market is going to follow a trend, something like a trend line like this. And then the market do something like this. Keep following it. Right? The market keeps doing something like this. And they're like, whoa, perfect.
Isn't that what the guy was doing? He was using Fibonacci to do this with us.
Now, Now, guys,
Mm.
watch this. Now, sometimes the market then do something like this. Hold on. Look at this. The market, see, according to their rule, if there's a break like this, that means the market wants to change, right? The market wants to change to a downtrend, right? So they are looking for a break like this, a retest, and something like this. But then, let me now show you what could happen. According to our own strategy, look at this. The recent lowest point, the recent highest point. According to our strategy, even if the market gets here, it is still an uptrend. But according to theirs, the market has changed because it has broken this trend line. So they will be expecting what? They will be expecting something like this, or they'll be expecting the market to give them a push into here, and then a pullback like this. But that is not going to happen because this is still an uptrend. This is still an uptrend. Because according to this, guys, according to our own this thing, our Fibonacci is going to look like this. And then the market gets to what? The discount price. The market gets to this discount price. As long as it has not broken through here, it is still going to, we're going to still anticipate this to go up. But they will not do that because they are, now, guys, the trend line, the trend line.
Chairman, leave those people. I beg, Chairman. Let's go
No, I
back
just
to our
want you
own.
guys to understand.
Okay.
The trend line will only look good once it is gone. See, all this thing here will look good from the past. See, if I draw a trend line like this, it's only going to look nice if it has happened in the past. But look at when the market was here. You cannot draw your trend line when the market was still here. You can only draw your trend line when the market is somewhere here or here. And it is already gone. All these moves is gone already. So they are always doing this whole thing wrong. Trend line, all those things, formation, and all those things doesn't
Forget all
work.
those things.
You just need to understand. That is why me personally, I don't like using all those terms, all those grammar a lot. Because, of course, why they are important, I want you to understand what is happening first before we then now put a name to it. Do you understand? So let's continue here. Let's go back to, sorry. Let's switch back to,
Candles.
right. So now we have our low, and then we had our break of structure. Let me use this. This is our break of structure here. BOS. And then once we have a break of structure and we have the market giving us opposite candles, we assume that is what? Our high. And then what do? We mark at our Fibonacci retracement 2 from the bottom right to that top. And then what do we expect? The market gets to what? The discount. Very simple. Guys, this is very, 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 very simple. Let's see. We're going to wait. See, market gets to a discount. And this is where the market currently is. So what do we think? This is where the market is right now, as it is. What do we think is happening? I want you to tell me. Let me zoom this in. What do you think is happening here, guys? What do you think will happen here? You don't have to be right. We are learning. So just tell me what you think. Can you guys hear me?
Yeah, I can hear you. I'm looking at something.
Let me. Again, you don't have to be right. We are still learning. Just say what you think.
Maybe I think it's going bearish. Is it going bearish? I don't.
Just again, we are still learning. You don't have to be right now.
Orange.
Where do you think he's going to go?
Hold on, it's entered.
It's not just you don't have to, again, you don't have to be right. I'm going to tell you exactly what we're expecting here. Is Mr. Emmanuel still here?
Yeah, he's there. He's on mute.
Okay.
I'm thinking.
I expect it to go upward trend.
Okay.
A
Why do you
pullback.
think so? Why do you think so?
It's going to come to the discount, then it's going to head back up.
And you think it has gotten to the discount?
I don't
Yes.
think so. I think it's gonna come down. It has to hit. I'm thinking maybe if there's a fair
It
value
is not.
gap or order block.
Okay,
It's not a. Okay.
now let me make it let me make it clear. Guys are again the fact that that you think about this whole thing critically is nice. Now, one thing you should understand is and I like stuff like this, it's going to really help. See, first of all, I said something about candle break. This looks like it has entered the discount,
Oh, it hasn't entered.
but it hasn't. They want what? A candle
Do
break.
confirmation.
Yeah.
Is
They
the
want a
okay?
candle break.
Is the week
Another
that
week.
has
Another
entered?
week. This thing is
Exactly.
tricky. Another week. So
Exactly.
you have to look properly.
Exactly. Now, another thing,
Yeah.
and I'm not going to judge you guys for this because we have not talked about order block and fair value gap. It needs to find an order block of fair value gap
Mm,
this move.
mm.
And then I am seeing one. This is one here. This is an order block here. So
Order
I'm
block.
going to
Okay.
wait for the market, and
To
if this
tap in.
and this is
Can
what.
I ask you? You see when it hits the order block, is it the body has to hit it or the wick? Even if it's just
No,
the wick that hits it.
even if it's just a week.
Okay, cool.
Now, this is a fair value gap here. So what I used to do is, because fair value gap is closer to other blocks, so I'm going to mark up my fair value gap first.
And then the order block underneath.
Yeah. So I'm going to do my session. So I'm expecting this to still come down to this level.
Can I ask you a question? You see, when you take your trades, yeah, do you set TP and all those things and
Yes,
your
yes, we do that.
this
Now,
thing and your
if I'm
stop
to
loss?
anticipate this now, this is how it's going to look like. I find my entry like this, find my stop loss like this, and my take profit like this.
What's
This is
the
what I would do.
return? What's the ratio? What's the ratio
Okay,
on this trade?
this is risk to reward.
Mm.
12. Yeah, 1:12.
Hmm.
So if I'm risking $1,000, I'm
Hmm.
expecting to make $12,000.
Okay.
Yeah.
Kevin,
Mhm.
our Lamborghini is sure, man.
Guys, you still need to really understand this whole thing properly. Again, so let's just focus on the learning.
So
Then
this is your strategy that you use sharp in one day. You can show someone your strategy and someone can understand your strategy in one day, in less
exactly.
than a day.
Now watch. Now again, this is me doing this on the daily time frame. Now we can do this on multiple time frame. Guys, to get multiple entry, this is the daily time frame. I'm just going to go down to the 15-minute time frame. Again, I said in the beginning,
The time frame you've been using since, what time frame is it?
daily time frame.
Okay, daily time frame. Okay,
Yeah.
okay.
So it takes a lot for all these things to happen. So I'm just going to go down to the 15-minute time frame. On the 15-minute time frame,
Chairman,
go ahead.
you see, if someone doesn't want to be doing all these different up, down, top, down, and that, can someone stick to one time frame and run everything
That's
the
what I'm
same one
about to
time
say.
frame?
You can just stick
Okay.
to one time frame. You can just stick to the 15-minute time frame.
Or what a 5 minute? No, 5 minutes too fast though.
It's too small. 15 minutes
It's too
is
slow.
fine.
So ideal 15 minutes, no problem.
Yeah.
I think I've got it now, Chairman, because I'm tired of going to different time frames. I'm tired of it. I think this is the way.
Yeah. You can
You're
just
right.
stick to. You can just
I'm
stick.
tired of going to daily to 1 hour to just stick to one time for do what I want to do. Come out.
Now let's do the same thing on the 15 minutes. Now look at how this looks. It's not really, it's a downtrend. It's showing us that this is going on, but it's kind of messy. There's a lot of noise here. But then we just want to stop it, make it look real, make it look logical. Now, what do I do? Let's do some back testing. Let's do some back testing. Guys, I'm going to start from here because it was previously an uptrend. And this move right here gave us this crazy change of character. This
Chairman,
one,
another thing, Chairman, can you do this here in the bearish scenario?
that's what I'm about to do. This is a bearish.
Okay, thank you. So we can have both angles,
Yeah.
because sometimes that bearish scenario is confusing at times,
Yeah, so let's back test. So yeah. Right. It was previously an option and it switched because this crazy move gave us what? Gave us like a change of character, right? So now let me show you. What do we do? The same thing from the stop here to the bottom here. Right? This is what? Our point of interest. Guys, once you draw our point of interest, now for a bearish, if you are drawing your Fibonacci retracement 2, you are going to start from the top like this.
Is this is recorded, right? Is this getting recorded?
Yeah, it's being recorded.
Okay, cool.
You're going to start from the top like this
Mm-hmm.
to the bottom like this.
Mm.
Right. And then what are we expecting? We're expecting this to move up right into the midpoint. Guys, again, look at this. This one here gets into the, but it is a wick. The wick entered into here. It is not
Okay,
valid.
okay,
Right?
not valid. Okay,
You
okay.
understand? So then let's see what happened. Let's see what then happened. Let's see what then happened. My network is a bit slow right now. Let's see.
What
Okay,
happened?
hold on. Hmm. Yeah, the section is being recorded. Hold on. Let me just redo this. Hold on. My network has been bad since yesterday. I don't know what's going on. Hold on. You're going to see how easy this is and how this is going to give us real clarity. Start here. Mm. This. And I'm coming. You know what? Let me just switch market first. I'm coming. Let me just. This thing is common. Let me just try and switch this network again. All right, let me see if this one is going to work. Can you guys hear me? Can you hear me though? Oh, I had to reset my network there. Are you guys still here?
Yeah, we're here.
Yeah, sorry for that. I had to reset the network. I don't know, it's not, so I have to be able to do this. Still not okay. I mean, all right, let me just explain like this.
Mm-hmm.
It's becoming terrible. Hold on. Mm. So from here now, where is it? Okay. So this becomes our high, this our low. And then what do we do?
Mm-hmm.
We mark our Fibonacci
Yeah.
like this. See how this came down, went up into the midpoint, and this becomes our high,
Mm.
right? And then what do we wait? We wait for what? A break of structure. It is here we had our break of structure, guys. See how we have ignored all this noise in here. Guys, see all this thing. So if I had to draw a path for this, if I had to draw that path for this one now, hold on. If I have to draw the path for this, it looks like this. From here, our lower low, our lower high, because this is the highest point, and then it is here we had with our break of structure.
Mm.
See how it doesn't look diagram perfect at all,
Mm.
but it is the same concept. We have been able to what? Ignore all these ones, all this noise, right? So now we have what?
Um,
a new point of interest. So this becomes our high here.
Mm-hmm.
And then this becomes our low here.
Mm-hmm.
And then what do we do? Guys, Fibonacci. From
Fibonacci.
that high to this.
Which one the premium again? Which color is the which one the premium
So,
here?
yeah,
Sorry.
you don't see once you draw your what you don't mind the color. Once you draw your Fibonacci like this, it's just two column up, down.
The bottom, the down is the
Yeah,
premium, right?
yeah.
Okay.
The down is the discounts. The top is the premium. In a downtrend, you
Okay.
are waiting for the market. See, just leave the name out.
Okay.
Leave the name out. If you do in a downtrend, if you draw it like this, you want the market to go back to the
Go
midpoint.
up.
Yeah, to the midpoint. And that's what happened. And that is why I entered this trade here. You see, I had a trade entered here. And look at my take profits. And then what did the market do?
Let me pause you. See when you're in some pause you. See when you're in a downtrend now.
Yeah.
You want the you basically want the market to go down
No,
into the
when the market comes down like this, give us
mm-hmm,
a new low. We want it to
mm-hmm,
go back because, guys, in a downtrend, we're
mm-hmm,
expecting to see a lower low, lower
mm-hmm.
high, lower
Yes,
low, right? So
yes,
this after this lower low, we know, of course, we're looking for opportunities to sell, but we want a
yeah,
pullback first.
yes.
So it is this pullback that has to go. So once we have something like this, I
Mm-hmm,
will drag what our Fibonacci retracement to like this. We
mm-hmm.
want the market to go to the midpoint,
Okay,
past the midpoint, and then here we look for opportunity to sell, and then we can
okay,
now sell from here. I'm sorry, we can now sell from here, find our stop loss like this, and I take profit like this.
okay. I
And
see
that
what's
is
going on.
exactly what I did
So
here.
you want it to go up here and then go back down
Yeah,
again.
give
Finish.
us a
Okay.
pullback and then a continuation like this. That's what we want to happen, right?
Mm,
So that is exactly what then happened here. The market gave us a pullback to the midpoint, and then that's why I entered this trade here, and then we have a break of structure here like this. And then once we have a break of structure, first we need to be able to locate. So from here, the market gave so from this down here, where is the high? This is the high here. So this
yeah.
is
Yes.
yeah. So we have to note this high here. It's very
Mm-hmm,
important
mm-hmm.
because that's going to be our point of
And
interest.
where's the next low? The next low will be this one here, down, down.
So guys, so sorry I could not backtest because if we are backtesting, this is the low that we are going to first think is the low. This one here. You
Okay.
understand? This one is the first because after a break of structure, we're expecting what a pullback. So once we start getting this pullback, this one is the one we're going to first expect the low is, and then we're going to do what? Drag our Fibonacci retracement to like this. But look at what happened. It did not get to the midpoint, right? It didn't get to
Mm.
the midpoint. So we are just going to what? Adjust and wait for the market to
Adjust
give us,
again.
yeah. And then the market give us this low here,
Mm-hmm,
right? And then we're going to put this here at this
mm-hmm.
low, right? And then what do we do? Mark out our Fibonacci retracement 2 again, and then look at what happened. The market
Okay, well
actually
done.
gets to the midpoint here,
Mm.
giving us a valid pullback. And then, guys, look at what is now happening. What do you think is going to happen here? Go down. We are going to have looked for opportunity here, and then we expect the market to give us
Go all the way down.
all the way down here. Perfect.
Mm.
Imagine, guys, imagine if we had considered this one our pullback. The market would have come like this and give us a lot of
Taking
people
us
would
out.
think this is a change of character like this. They expect the market to give us a change of character like this and continuation to the upside, but they are wrong. They are fucking wrong. So this is exactly what the market is doing. Guys, I hope you are able to at least understand this Fibonacci retracement to properly. Again, the video is being recorded.
Mm-hmm,
I'm going to send you the recorded version,
mm-hmm.
just like I did yesterday. And guys, the next class we are going to have, which is probably going to be next week, because this week is going to be, we agreed on 2 classes, 2 sections in a week. So
Mm-hmm.
you have the video, guys. I want a situation whereby next week, when we come live again, you're already so good with this because you have the video, you can go rewatch, understand this and all that. And check this out, guys. Again, this is what I'm going to do. We might have one more class this week.
Please, let's when?
We might have one more class this week, but not tomorrow. Probably next
Please
tomorrow.
don't. Yeah, not tomorrow, but try fit one more this week. We need a
Yeah,
chairman.
because the reason for that is I'm going to teach you guys this interface, so you can go in there
Mm.
and practice. So that's what
Okay,
I'm going to
okay.
do for the next class. All right. So that is that on that guy. And now I'm going to stop the recording before I talk about this one. Let me just stop the recording.